That would, yeah, yeah. So let's do this. Let's focus on Mikhail for a second here. Before you trade any crosses, well, first of all, when you trade a cross instead of a major pair, you're trading essentially, you're trying to trade an index. But, right, because the amount of money flowing between Canada and Great Britain today is nil. You understand that? Like the UK and Canada are not doing a big move today. Like they're not trading extraordinary amounts of money today versus yesterday, okay? So you have to say what you're actually doing is trading pound globally, the demand and supply of pound globally, and the supply and demand for the Canadian dollar globally. And if one happens to be strong or one happens to, and the other happens to be weak, you put the cross together and you're trading strong versus weak. But you're not actually trading the flow of money from Great Britain to Canada or vice versa. Compared to the $5 trillion a day, it's nil. It's not even a rounding error. It would be so small. So this is why I create indices. Now, let me show you how to create your own indice through your brain. This is called a relative strength exercise. And I started trading, when I first started trading almost 20 years ago, I did this manually before I even looked at a chart. Okay? So let me get a simplified version of the charts on here. Okay. Let me do the same across the board. Where's it? Simple. Template, FX Bootcamp, simple. Okay. So this is CAD versus yen, CAD versus Aussie, CAD versus Swissy, CAD versus US dollar. Now the Aussie is on the numerator, the Aussie's on the numerator. No, sorry, I got it back. CAD is on the denominator, CAD is on the denominator, CAD is on the numerator, CAD is on the numerator. So we are, and make sure they're the same time frame. 1H, 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 1H. Okay. Let's change these to 4. Let's try to get a little bit more time. Okay. So we're trying to discern direction. And by discerning direction, we are trying to answer one question. Is the Canadian dollar strong or is the Canadian dollar weak? So we can take a look at that. Now, this is where perhaps my little tool, predictive price action pivot points, would be helpful, because we're actually, I used to do this manually, of course, but we are actually measuring the slope of price action, and we're looking for congruency. Okay, that's why we want the same time frame and the same data set. Okay, so this is a new tool, and this might make our job easier. Okay, if because of the we're on the numerator at the top, if CAD yen, right, if the slope is down, that means the CAD is weak, because right now CAD is weaker than yen, CAD is weaker than Swiss franc. And now looking at the denominator, okay, if this is going up, Australia is stronger than CAD. So CAD is weak. And if this is going up, CAD is weaker than the US dollar. So what we see here is this means weakness for the Canadian dollar. 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 So we have a currency that is weak. And I'm isolating the Canadian dollar. This is called relative strength exercise. The Canadian dollar is weak relative to the Swiss franc, to the Japanese yen, to the Australian dollar, and to the US dollar. And now the slope, if you want to do that, which is, right, rise over run, the slope tells you how weak it is. So the steeper the slope, the weaker the CAD is. So you might say, dollar is less strong than the yen based on the slope. This is a bigger negative slope versus less big positive slope, right? So now you'd look at that and say, well, based on my relative strength exercise, the Canadian dollar is weak, okay? So, cool. Now you would do the same thing somewhere else and decide whether you should, what you're actually doing is looking for something that's strong. So you'd look at Great British Pound and you do the same type of analysis and go, oh my God, pound is weak, pound is weak, pound is weak, pound is weak. I would never trade pound CAD. Why? Because we've already discerned the CAD is weak, so you would never pair up weak versus weak. So instead you'd look for something strong. So you'd look at Japanese yen, for example, and say the yen is killing the Aussie, the yen is killing the euro, the yen is killing the Kiwi, the yen is killing the CAD, the yen is killing the pound, so you should certainly be selling the Canadian dollar versus the Japanese yen. And you'll see I already have this up for day trading. I've already done this for you. We have the down, 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 up, up, roll reversal, right, on the swing. And then check this out, ready? Down, 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 up, up, sell. 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 Down, 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 down. What's tomorrow likely going to be like? Up, up, sell. Down, 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 down. If the trend continues. That just happened! Boom! What do you think? Pretty neat, huh?